What's up, YouTube? Welcome to Automotive Life. My name is Lucky, and today is all about learning how to get a loan for $100,000 to $300,000 if you're looking to finance an exotic or a Highline car. Now, there's a lot of people that have misconceptions about buying these types of vehicles when it comes to their credit. We get so many people with 800 credit scores walking into the dealership. I got 800 credit, I can buy whatever I want, I'm the man. That is completely false. Your credit score has nothing to do with it when you're buying something that much. Once you get over $100,000 auto loan, it completely changed the game. So I'm gonna give you guys some of the tips and everything else from an actual dealer, not somebody that's a professional, whatever, car flipper or something else. You know, I'm gonna tell you what the banks look for, some of the things that we look for ourselves, and this way it kind of lets you guys know. So if you're looking at buying maybe an exotic car or a Highline car, this will at least outline a little bit of the things you need to get ready before you start your shopping. Now, before I get into the video, if you could please do me a huge favor and smash the like button for the YouTube algorithm so it helps me find more amazing viewers like yourselves. Also, if you haven't subscribed to us already, please do click the notification bell. I post great content like this every single week. And if you can, follow us on Instagram at automotive.life. If you have any questions or anything else, hit me up there or put them in the comment section down below, and let's get into the video. Okay, the first thing we're going to talk about are income types. So you have your self-employed and your actual employee. So if you are an actual self-employed business owner or entrepreneur, whatever you want to call yourself, you are not going to be able to get a lot of these loans with just bank statements. Now, this is going to hurt a lot of people's feelings, but it doesn't matter how much you got running through your bank account. We get a lot of people with this misconception like, look, I got $200,000-$300,000 flying through my business for my Amazon SBA business. Make a long story short, they want to see what's in your account at the end of the month. So they want to see your taxes. So if you're a business owner, they may ask you for a year to 2 years of your tax returns because they actually want to see how much money you actually make. So I know, like I said, a lot of business owners are going to get triggered and they're going to say, oh, I know banks that will do this. There are some banks that do, but once you get over that $100,000 threshold, a lot of them are going to require you to have bank statements as well as tax returns to back that up. Very, very important. Now, on the other end of the spectrum, if you're an employee, believe it or not, banks see you as a lot less of a risk, even though you make less money in some cases. They were willing to give you an extended amount of credit just because you're an actual employee. Now, if you are looking at getting a $100,000 auto loan, I really recommend you having at least a year on the job. Preferably if you got a shorter job time, if you were, let's say, a plumber at one company and you transferred over and you're a plumber in a new company, you have the same professional line, which counts as solid job term across the board. But let's say you were a chef at a restaurant and all of a sudden now you're a dental assistant, you know, in a different thing because you just graduated and got your degree. Those things will not work. They will actually tell you no. So when it comes to being employed, you need to make sure, one, you have your bank statements ready and also your pay stubs, and best believe they are going to verify everything. They're going to take a payment calculator and they're going to go through everything. So make sure you have those two things ready before you even start the process. This is my favorite part of the video, your credit score. Now, when it comes to buying an exotic car or Highline car, your credit score only determines two factors, your interest rate and your term. That is it. It doesn't matter with anything else. I'll go through with the rest of it, but just remember, your credit score only determines your rate and your term. Now, they're going to go through your bureaus and they're going to make sure, you know, that your score is good. But one of the things you guys need to look out for is, just like when you're buying a house, they do a tri-merge report where they pull from all three credit bureaus. A lot of these newer credit unions and other banks that do high-term lending are starting to pull from multiple bureaus at the same time. So you could be a rock star with, let's say, TransUnion, you're a 750, but on Equifax, you're like a 650, but Experian, you're like a 610. They may pull the 610 and your 700 and take the middle ground, and that's what they're going to rate you off of. So this is something that's newly happening in the automotive industry. What's it called? Navy Fed is starting to do this, where they're pulling two reports and actually comparing them back and forth to give you a risk factor. So that's one of the other things that the score is going to do, which they don't tell you, but most banks do, is they're going to give you a risk factor off of looking at your different reports. So when you get these people that come into the dealership and they're like, I'm an 800 credit score, I'm the man, I can get approved for anything. Nope. They may give you a 2% interest rate or 1.9 or whatever the lowest is, but they may cut your loan amount to a certain dollar amount. Because like I said, your credit score only helps you with your term and your interest rate, and that is it. Let's get into the next step. Okay, here's another spot that people are probably gonna get triggered on is your accounts and trade lines. This is what's going to determine your actual loan amount. So as you're going through this process, this is where a lot of people get triggered as well. Oh, I paid all my auto loans on time. My credit cards are at 0%. I'm the man. They want to see, like I said, what your limits are, what everything else you have, because if you have, let's say, a 2-year-old credit card and you have maybe 3 auto loans paid, but all your auto loans are like $10,000, $20,000, and maybe $30,000, that doesn't give them justification to give you a $100,000 to $300,000 car loan. They'll look at your credit and be like, all right, Mr. Smith, you've been a great customer, you've paid all your payments on time, but that's when your car payment's $300 to $400. How do we know that you're going to be able to afford this, $1,700 to, let's say, $3,000 a month car payment? So that's the big gap. This is where 99% of the people get turned down, and they don't understand the concept. They figure, I have an 800 credit score, I've paid off 3-4 cars, they should give me this car, no problem. Now, there's only a few ways you can get over this particular thing. The first one is always the best one, which is getting a massive down payment. If you're buying, let's say, a $200,000 car and you've only financed a few smaller cars, some of the banks will outlook the risk if you put an extremely large down payment down. This will hopefully teeter them on their way. Some may say yes, some may say hell no, and tell you to go out and get a different car. The next thing that helps you guys out a lot is a cosigner. If you have a cosigner that has like an $80,000 to $100,000 car in their name, they can co-sign with you and bridge that gap to help you be able to afford that expensive vehicle. The downfall is I don't recommend it, because once your friend sees you driving a $180,000 Ferrari, or you buy an Audi R8, he may want to get one, and when he goes to the bank and finds out that his debt to income ratio is all screwed up because he co-signed for you, now he's going to be upset that he can't get that, and he's going to force you to refinance it. So I wouldn't do that one. The next one is called a commercial loan. Now, when you have, let's say you're a business owner or an entrepreneur and you have, several LLCs or S Corps or whatever you have, it's much easier for a bank to approve you for a business or corporate auto loan. It's very common in our industry where, like my tow truck was about $150,000. So if them to give you a loan for $150K only requires a personal guarantor and it's on a different pay structure, it does have much higher interest than a traditional loan, but you still can go around and get a car with that route. Don't recommend it, but that's something else. And the very last one is called a bridge loan. Now, this works with real estate, financing, boats, cars, trucks, whatever the case may be, is you buy things at a smaller price, keep them for a few months, and then basically trade them in. So let's say you're this guy that has 3 auto loans that are paid for, and his highest loan is $35,000. What I would do is stretch my budget and try to buy something $65,000 to $75,000. Once you get approved for this loan, you keep it anywhere from about 3 to 6 months, preferably 9 months. Once you show that seasoned trade line on your account, you should be able to bump up to the $100,000 and $150,000 trade line, because it'll be $300 or $400 extra on top of your payment, which they're willing to basically give you once you show that you've been a good steward of your credit and you've actually made these payments on time and you can afford that high payment. Now, a lot of people are thinking, well, wow, I gotta buy another car just to get the car that I want. Why would I do that? One, it's about building relationships, it's about building your credit and building trust. And on top of that, a $65,000 car it's not like we're sticking you in a Kia and telling you good luck and just drive it for a year. You can get a lot of really nice cars for $65,000. You can get anything from a twin turbo Porsche that's a few years old to Mercedes AMG GTS with maybe a little bit more miles, a Bentley Continental GT, a G-Wagon, hell, even a Corvette. All those cars are great cars that help you get on your stepping stone to get to your much more expensive car. And like I said, you just got to sacrifice to 3 to 9 months. But once you get that little bit of a track record, then you'll be able to pretty much get whatever you want, and that's the best part. The next thing we're going to talk about is dealerships independent dealerships, and private parties, the pros and cons to each one. Now, the first one with dealerships, franchise stores, they have some of the things that can bypass a lot of things we just talked about. So one of the best parts about buying at a franchise store is a lot of them have their own banks. So if you ever wondered why, you had a friend of yours that had okay credit, worked at Taco Bell, didn't make a lot of money, but all of a sudden he drives to Mercedes and buys a $90,000 C-Class and drives around all over town, and you're like, how did this guy even afford it? Well, Mercedes-Benz Financial will go out and take certain risks on other cars to hopefully build new clients to get stuff in there, and they have their own lending parameters. You don't have to focus on like what Wells Fargo and Bank of America and what typical lenders want to fit into that structure. Plus, a lot of times they have quotas. They need to get out X amount of cars. So one of the only ways to bypass these things is to go to a franchise store. Now, here's the con. When you buy from a dealer or you buy from a franchise store, you're going to be paying complete retail. That's full retail price plus, which is plus interest, plus fees, plus tax. You're going to pay it all. So more than likely, you're going to overpay for the vehicle, but you'll be able to get the vehicle you want or get that vehicle that's over $100,000. Now, I don't really recommend going this route unless you absolutely have to, or unless the vehicle that you're searching for is that vehicle that's at the franchise lot. So if you've been, like I said, a good steward of your credit and you've been paying your bills all the time and you really want a brand new G-Wagon and that's what you want, and your highest loan is like $40,000, then I would recommend going to Mercedes and going and applying for that particular type of loan. Depending on what their banks look like and how many cars they got out, they may be able to accommodate you and stretch those rules to get you approved for that $100,000 auto loan. But that's one of the very few, rare instances. The next one is independent dealers like myself. Now, we can sell you exotic cars, Highline cars, do all that great stuff, but unfortunately, we go back to that traditional financing. A lot of our banks require you to have, a $60,000 to $85,000 car, somewhere in there, the bridge loan to get you into the more expensive cars. And then on top of that, our banks are not as open as like franchise stores. So a lot of people are going to be either coming in with their own credit union checks or something like that. And, they'll always say, well, we specialize in exotic cars and Highline cars. We have banks for you. A lot of these guys, the banks they have are awful. They're going to be, I won't say names because we do business with some of them, and they're going to charge you a lot of fees. The interest is going to be really, really high. You just don't want to get into that. Now, the next one is private party. Now, this is the best one because when you buy from private party, you don't have to pay sales tax. And the reason why this one is so important is you got to remember, when you're buying a $100,000 to $300,000 car, you're talking anywhere from 8% to 12% sales tax. That's a huge dollar amount that you get to save because you're buying from private party to private party. You don't have to pay it. And then on top of that, you get more negotiating skills because when it comes to purchasing one of these vehicles, there's not people out there every day looking for, let's say, a $150,000 Ferrari. So this gentleman may have this Ferrari up for sale for 3 months, 6 months, and you may be the first person that's actually qualified to come in and buy the car. So you can tell the guy, hey, you know what? I know you want $150,000. Unfortunately, my bank only approved me for about $130,000. Would you be able to work the deal? If he says yes, fantastic. You saved whatever $10,000 to $15,000 in sales tax, and then you saved an additional $20,000 in sales price, which the other two dealers would never let you do, and you get the best deal. But the only way that you can buy from private party, which goes into our next step, which is getting pre-approved. Now, pre-approvals are really the best way to go. I always tell people if you can, try to get pre-approved before we even start shopping because it gives you more options and lets you know where you fall as far as the spectrum of cars and dollar amount that you can get. Now, there are a lot of banks out there that do special types of financing for cars, but I'm going to give you a few of my personal favorites. Very first one is PenFed. PenFed is probably the most, easiest / best one to work with when it comes to getting exotic and Highline cars. If you build a little bit of rapport with them after you get your first loan, your second, third, fourth loan is going to be extremely easy. Now I just pretty much, hey, I want this car. here's my credit, blah, blah, blah. They buy it, boom, you're good to go. And they will actually wire the customer the money. They'll take the title in. If there's a pen fed in their state, they can walk right in there with the title. They can wire the money there. It's a great thing. The next one is Navy Fed. Navy Fed is very aggressive when it comes to getting these types of loans. They usually, if you get a loan from PenFed, they will try to match it, if not beat it. Those are one of the best ones. The next one I tell everybody to do is your local credit union. Now, when it comes to local credit unions, they may not have maybe the buyers that buy these cars, and that's one of the things we're gonna go over here in a little bit, but what you wanna do is, let's say you get approved through PenFed. They say, hey, we're gonna approve you for 72 months at 3.5% for this, $110,000 Aston Martin. You take that paperwork and that approval and you show it to your credit union. You're like, hey, look, this is what I'm getting from another credit union. Can you guys match or beat this? Now, the reason why you take that approval in is because a lot of banks don't have buying programs for those types of vehicles, so they don't really know how it works. So a lot of times you may get declined on a vehicle when you go to an approval through a credit union because they honestly don't know what the value is of the car. There's no Kelley Blue Book for an Aston Martin. You can try to use Black Book, you can use MMR, you can use all these other things, but a lot of the traditional things that the banks use to determine a value of a vehicle doesn't work for exotic and classic cars. So this is something you want to do. So like I said, you get your approval, you take it to your credit union, you show them, and then once you build that little bit of rapport, now you'll be able to keep going back and buying cars from them. There's a lot of local credit unions here in Vegas that do some really amazing things when it comes to exotic cars, Highline cars, classic cars, RVs, all that other stuff. So once you get that, like I said, always try to get pre-approved so at least you get the best options, and then it gives you the ability to shop private party to get the best deals. Now we're going to talk about something extremely important. These are the things to stay the hell away from. The very first one is 10-year loans. I know it's extremely tempting. You can buy the dream car of your dreams for 10 years financing with a low payment. But there's a lot of reasons why you don't do this. The very first one is depreciation. As you're buying this car, every month you're paying this tiny little amount, your depreciating of that value goes down and down. And if you drive it, it's going to go even faster. And one of the things they don't tell you about a lot of these 10-year loans is you pay the interest up front. So let's say you buy a $200,000 car, and for the first 3 years you're paying on it, and you're like, you know what? I want to get another car. I'm ready to get something new. And you go to trade in your $200,000 car thinking you're probably down to maybe 180, maybe 190. And you come to find out that you owe the exact same dollar amount. The reason is a lot of these loans are amortized where you got to pay the interest first. The majority of the payment is done to interest, and as you get down, through the 5th year, it starts going more and more towards the principal on the back end. And that's some of the things they don't tell you. So whatever you do, never do a 10-year loan on an exotic car. I don't care if you say, oh, well, I'm buying this car, it's my dream car, I'm going to keep it forever. Don't do it. 9 times out of 10, it's going to bite you in the ass. The depreciation is going to kill you. And then on top of that, the interest you're going to pay is going to be obscene. So don't even mess with it. The next one is going to be leases. Now, leases, there's 2 different types. We have ones from dealerships and we have ones from private individuals and banks. And I'll go through pretty much both of those. So the very first one is leases through dealerships. Now, it's very intriguing when you can get an exotic car, a Highline car, for almost half the price when you lease it compared to your payment. But it's a trap. There's always something they do to get you in there, whether it's a high residual buy down or limited miles or something like that. Now, I have a great story to tell you guys with a friend of mine that bought a Rolls-Royce Wraith. About 2 years ago in Vegas, they were getting really hard to sell for some reason. The Rolls-Royce dealership here had quite a few of them. So he noticed an ad on Craigslist or Facebook Marketplace where they actually were posting, get a Rolls-Royce Wraith for $12,000 down and $2,000 a month. He saw this, couldn't believe it. Now he does real estate, so he figured, okay, I'm gonna use this thing, pick clients up every now and then, and this should basically raise my credibility and help me get a few sales. Now in all reality, it did help him get some sales and he did make some money off the thing, but he did not read the fine print. When he purchased this, with this low of a lease, your miles are extremely low. So they gave him 1,200 miles per year. That's right, so you get to enjoy your vehicle for 100 miles per month for the next 3 years. Well, obviously, when he first bought it, he had to show his friends, show his family, drove to Cali. So within the first, I think 2 months, he already killed the first year of miles. By the second year, he was already over the whole term. By the third year, when he time to trade it in, you would never believe it. When he traded it in, they asked him for a $60,000 check. And when he asked, well, why have I got to pay $60,000? His mileage discrepancy, I don't know if it was $3.88 or $4.88 per mile over the miles. He almost blew a gasket. He didn't know what to do. And they're like, well, you can avoid all this if you keep the car. You just got to pay the full $388,000 and your payment pretty much doubles and you can keep it. So that's how they do you. So please stay away from leases. I know they're very interesting. Now, if you're one of those people that don't really drive that much and it's a secondary car, then you can go ahead and go for it. But I really tell people to stay away. The next one is the individual or outside banks that do leases. Now, there are a few good ones out there that help people get in the cars and let you do things, but a lot of these ones trick you and trap you into these leases. So let's say you buy a $100,000 car and they're like, oh yeah, your payment's only $1,200 a month for the first 2 years, but after that second year, you got to pay us off. So every month, you're making your $1,200 payment. All of a sudden, your two years go up, and they're like, okay, we need a check for, let's say, $80,000, whatever the case is, the balance is. So you're like, okay, you go to your credit union, you go to get a loan, and they say it's only worth $50,000, but your balance is $80,000. Now you got to come up with $30,000, and you only have 30 days to come up with it, because if you don't pay it off, they smack you in your credit and then they repo the car. And it's just a bad thing. So I tell a lot of these people, there are some good leasing companies out there that you could find. I don't really recommend any particular company, but there are a few good ones out there. But I recommend staying away from those. Also, there's a lot of these people out on Facebook, Craigslist, OfferUp, and even YouTube offering these special exotic car things and tricks to get into them. Any type of creative financing to get an exotic car that you cannot afford is bad juju. Don't do that. Don't max out your credit card. Don't get 3 auto loans to funnel up into one loan so you can borrow against this to get one big car exotic loan. Don't do that stuff. When I see these creative financing things where it's almost like the old interest-only arms on mortgages, where you pay the interest only, but your principal never goes down for the first 2 years. After that, you have balloon payments. So imagine paying $1,500 a month so you can drive a brand new Huracan, and then all of a sudden your payment jumps to $5,500 a month in 2 years. It's very scary, but people are desperate and they want to show off, so they get these things and they basically ruin their credit so they can't get another one again. So please be patient, follow some of the things in this video, and you can definitely move your way up. Next thing is buying programs and lender guidelines. Now, every bank you're going to talk to has different types of parameters on what they lend. So it's your job to do a little bit of due diligence before you start running your credit everywhere and finding out. So let's say you find a 2015 Lamborghini Huracan. It's got 15,000 miles, it's banana yellow, it's exactly what you want, it's your favorite car. What you do is you actually call these banks and you say, hey, I need to speak to somebody in underwriting. And you call them and you say, hey, I have this 2015 Lamborghini Huracan with 15,000 miles. Is that something you lend on? Most banks will say yes or no, and they'll give you some information, but this is what you need to write down so this way you know. As you're doing this process, they may say, hey, you know what? We only do 2016 and above. So now if you would have ran your credit, you would have wasted your time. Or they may say, hey, you know what? We don't like Lamborghini, but we like Ferrari. Every bank has different lending guidelines and different lending parameters. These are some of the things you're going to need to learn when you're talking to some of your local banks or credit unions. Also, some of them, even though they love Ferraris and they love this year and they love whatever, some of them hate the models. Depending on the model, they see different risk factors. And this is something the banks never tell any of you guys, but we get to see behind the scenes is as they basically put you up against the car, it calculates a risk factor on how likely you are to default. So depending on your car and depending on your credit, That's what gives them that risk factor. So that's why we need to call into these places and find out what they have. Now, the good news is if you have 2-3 cars you're interested in, this is the best time to ask them if this is in their lending wheel. Hey, you know what? Do you guys do Ferraris? Yeah, we do Ferraris. You know what? I also was looking at a 67 Mustang Fastback. Beautiful car, but it's a classic car. Do you guys do classic cars? Yes, we do. We can do classic cars. Okay, cool. You know what? I'm also looking at a G-Wagon, brand new from Mercedes. Do you guys do new cars? Yes, we do new cars, and we do all the way down to 1.9%. So you're taking all the rates down, all the stuff that they list them down, so this way you know what is actually in their lending parameters, so it gets you ready. So when you start shopping, at least you have a little more information. And a little side tip, what I tell everybody is when you're calling these credit unions and these banks, a lot of times ask them, say, hey, you know what? Do you guys have any repos of Highline, exotic cars, or classic cars that you're wanting to sell? I've personally gotten some really great deals from small local credit unions where, you know, they don't take a lot of their cars to the auction. They usually sell them to other members. In different states, it may require different laws where they have to sell them at a public auction, but you can sometimes get some really great deals from buying from your local credit union. They may say, you know what, we had a guy, he put $20,000 down on a brand new Corvette and just disappeared. We got it sitting here in the showroom, or we got it sitting here in the yard. Would you like to come look at it? You could say, no problem. Corvette wasn't really what I was looking for, but if I can get a $20,000 back a book, let's go for it. So it gives you that other opportunity to actually go out and find something that you like. Also, another thing you need to find out is the different types of cars they lend on when it comes to titles. Now, every once in a while, you will get a really great deal on a car that has a rebuilt title. Now, some of the local credit unions here in Las Vegas actually do loans on rebuilt titles. So if you get a really great deal on a Maserati Gran Turismo that was smacked in the front end, but now it's running and driving good, and you're getting it at 50%, at least you can run it through there. Now, unfortunately, these are only through smaller banks and other local credit unions. Big banks like Wells Fargo, Bank of America, Navy Fed, and Penn Fed do not do rebuilt titles. Now, if you go down there, you could ask them because every state, different laws offer different things, but I would check with your local credit union to see which one works best for you. Okay guys, this is the final tip, and this one always makes me laugh. Know your damn budget. We get so many people that come in thinking, well, okay, well, I can afford, a $1,200 a month payment. And then they get down the finance and they're like adding fees and adding interest. Now their payment's $1,500. And they're like, yeah, I can afford $1,500. Yeah, I'm good to go. I can afford it. And then they're like, oh yeah, by the way, you have to get full coverage insurance and your deductible can be no more than $500. Okay, well, no big deal. I'll go ahead and do it. I'll make it happen. And then they find out their insurance is $500. And then I tell everybody, when you buy an exotic car or Highline car, you need to add $350 a month to depreciation and maintenance. Because when you get one of these cars, I'm telling you guys right now, let's say you buy that Lamborghini Huracan and you're driving around, you're showing off to your buddies and you're trying to do burnouts in an all-wheel drive car and you roast a clutch and it's $8,800 to replace it, you're gonna be crying. And that's where that $350 a month you add onto your payment every month goes to. It pays for the depreciation and pays for the maintenance. Now, if you add all three of those things together, you're looking at around $2,300 a month. So all of a sudden, your $1,500 or $1,200 a month car is now $2,300 a month. Can you afford it? Now, there's nothing worse than getting to the finance table, getting ready to sign, and you get some outrageous interest and you get some outrageous insurance pricing. We had a guy come down, saved his whole money. He basically worked from 18 to 25, worked with his father's business, got his own job, went to college. Now he's doing really well, and he wanted to reward himself with the Ford Shelby GT350. So he saved up $25,000, put it down. When we were getting ready to finish everything else out, he called up his State Farm agent, added it to his insurance, $550 a month for the insurance. And the biggest insult, they wanted $2,300 to start his policy. So these are some of the things you need to know about before you sit down and finance, because you don't want to look like a complete idiot when you're just like, I can afford $1,500, no big deal. And the finance manager's like, okay, sir, I need your full coverage insurance, I need your deck page. Go ahead and call your insurance rep and send it our way. And then you get smacked with that. Now you're just like, well, geez, I have to pay this much. So it really helps for you guys to know your budget before you get in there. Because like I said, once you get to this exotic car and Highline realm, the numbers just jump up dramatically. And remember, $1,500, you may be thinking that's a really expensive car. That's like a $100,000 car with like $10,000, $20,000 down. Wait till you get to the $200,000, $300,000, and $400,000 realm. Your payments are going to be insane. I have friends that are driving around $4,000 or $5,000 monthly payments in the Rolls-Royce Cullinans, and they're so excited, but man, that's a big nut to crack. So once again, know your budget. Thank you guys so much for watching the video. I truly appreciate it. If you learned anything, please smash the like button. If you haven't already, please subscribe to us. Like I said, I post content like this all the time. If you have any questions or comments, please put them in the comment section below. Also, if you want to follow us on Instagram at automotive.life, I post great content there all the time. If you want to DM me on there, I'm also there as well. And if you have any more questions, like I said, my email and everything's down below, and we'll see you next video.